Good morning, everybody. Welcome back to another video. I quickly want to review this morning's price action, as this was quite the interesting one, I would say. And I just want to go over this over here, and I just want to explain the basis of that, and also take a look at ES. ES basically had that same thing, although it wasn't nearly as crazy around the board. And we can see that Dow was basically sitting sideways over here. And then if I quickly zoom over to, let's just go over to this guy, and we can just open up the DXY and we can look at the 1 minute. There you go. I was initially expecting a possible reversal on this period, just because we had this old low and we also had this weekly fair value gap that we traded into. Although on a daily, the bias was bearish, targeting for this old low, and we were looking at NAS. If we go up to a daily, we were looking for NAS. Since it traded that fair value gap, I was looking for it to trade up higher to reach for its weekly old high, which I still believe that is going to reach up there. And ES was also reaching, it traded through this daily fair value gap, and it was reaching for its higher time frame weekly order block levels, daily balanced price range on old highs. And the Dow, if we go back and we quickly look at the Dow, then we can see Dow did actually trade its monthly old high. Speaking of monthly old high and looking at this, I actually want to go look at NAS on a monthly level and just have a view of this. See, if I look at NAS and I look at this high right there, then I could say, yes, it did trade that. But at the same time, it stayed above it. So I still want to see NAS reach up for this target from there. And ES, I still want to see it reach higher, but not as much on a monthly yet. I was looking at a weekly, and that's where I found this high right there and that order block right over there, which you can see or noted. And then on a daily time frame, and which is really interesting to me, is if I go back, then it's got a beautiful fair value gap right in there, right there. It's got a beautiful fair value gap, and then we also have that. Let's zoom in there. We also do have this gap right there, and I believe we already traded through that. Oh, we didn't yet. Oh, that's the one we traded through now. But anyway, I was looking at this gap up here and this gap there specifically to see if we were going to trade through it. And as you can see, we have clearly traded right through it. And price is still raging upon higher, right? It's still raging higher. After trading through those levels, it's still raging higher. Look at that, bam, right through it, and we are raging higher. Now, initially this morning, I came in, I looked at this, and I was like, look at that. We're so close to that old high. We're going to reach for that old high. And we're so close to this weekly order block. We're going to reach for that. And DXY was reaching for this old low right there. So that's my hard time frame bias. And then I went down to a 15. And then I saw this order block to be in line with this bias. And then I was looking at I was looking at low, high, lower, low, and we had this breaker block right there, which at the time we were trading up here, and I didn't see price coming all the way down. I'm pushing up higher again, which we did kind of clear this now, but it really invalidated this whole level and this whole concept over there. And I had the exact same idea on ES. I had that order block, and we had, and now on this pair we had equal lows down there, and to me there was like equal lows here, equal lows up down there, and we had formed this equal high which we didn't that cleared. To me, these equal lows were being suspicious because I wanted to be bullish. Now seeing equal lows on this pair, that conflicts with my bullish bias, right? So that was concerning to me. And if I go down here and I go down to this one and we go down to look at DXY and we go look at the 15, and I wasn't really looking for any particular levels on a 15-minute time frame on this pair. I was specifically looking at these levels below us on the higher time frame to provide us premise for possible. So we traded into it, okay, and then we started reversing. I was looking at this. There's a fair value gap right there. I was looking at this fair value gap imbalance. This was a balanced price range because we had this and this gap imbalanced price range. Bam, and then we traded into that, and we initially started trading up higher. And as this pair, I saw equal highs there and there. So that's why I was looking at these equal highs as potential targets, and then this fair value gap would be a great potential target as well. So I was looking at all these levels, and price was starting to trade up higher. And at that say 839, if you go look at 839, and we look at this boy, and we go look at the Nasdaq, and we look at 839. See that 839, we had a breaker block up here, by the way, high, low, higher, high. And this breaker block to me was backed up by the DXY, which traded those higher time frame levels, and that's why I expected a retracement. So then that would be that there, and then bam, breaker block. So it starts 839, same time as dollar traded in its balanced price range, and then it started trading lower, right? Then I was looking for price to come back up into this order block over there, which it didn't do that. It didn't come back up there again. But then we had a fair value gap. You take this wick, you take this wick, and you get 50% of that, 50% of this, and you extend the line, you extend that line, then you can see we tapped into that, and that sent price lower again, and then we traded into these order blocks, and then I had this fair value gap, looking to see how price reacted. It only acted as a speed bump, and then price came up one more time. I believe in there. This is hiding it. One more time, it came up. It cleared those. Look at the time, 850, and then started trading now lower, 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 lower. And I saw this is a good profit target. It was low, high, lower, low breaker block. You got to be mindful of this. It could reverse here, start going higher, and then it at 855, bam, it just shot right through and hit the target. By the way, I was watching this setup. That's why that's on there. Because I was watching that setup, and I was just tapering because I wasn't gonna take it anyway because it's 840. That's past my macro. So that's why I didn't take that. So I left that to run, and that setup ran down there, and it went to. And another reason why I didn't really take the setup because of this breaker block, right? That if I measure this up to where I would be in, it would be 0.06, which that would probably be like 3 handles or something like that. So that's why I didn't consider taking that setup because that to me was concerning enough. And then in all by itself, it was going to be a high resistance run. Now there's the other thing here. Let's look at this time, 850, and then let's go. Let's just look at dollar over here. We can look at it over here, right? 850. It went up. We had that. There's the balance price range. It went up. 845. See how dollar started trading down. Dollar started trading down at the same time that Nasdaq was trading lower. At the same time that ES was sort of going down and going back up and then going slightly down and back up again. At the same time, Dow was just sitting sideways, and that's why we had the sudden pop right there. Because at that specific, if we go look at that specific time, which is 8:55, right? 8:55, bam. See how that ES released, and bam, it was allowed to trade lower. And then go look at 8:55. Look at that. Dow started trading lower right there in that candle. And let's look at this puppy. 8:55. See that dollar traded higher. So for one candle, for 1 minute, price was in tandem, and that's why it was allowed to shoot down and grab that liquidity right there, trade into that fair value gap right there. So that's another good reason over there. And then another thing I saw was I was looking at these lows that were trading lower. At the same time, the dollar, the dollar, the dollar, the dollar. This is confusing me now. Let's go look at this one. That was confusing me a little bit. 8 o'clock. Okay, 8 o'clock. Let's go back to 8 o'clock. At the same time, dollar was making these slightly higher highs over here, right? It was making these higher highs over there. At the same time, that ES was doing the same. The ES was unwilling to make that same lower low, right? Look at that. NAS made a lower low. At the same time, Dow was making higher highs. So Dow was being bought up and ES was being bought up because they were both unwilling to push down lower one last time before going up. So that was like, oh, that's extra strength behind the trade idea. So you got all these confluences sitting behind you, and that's like you gotta be careful there. But so I was concerned with all those little factors, and there was that little trade that ended up going to my expected, which would have been a take profit point, although it was only a tape read. And then after the fact is when I started looking at this, and I was like, okay, well, if this starts rallying now and this goes back in tandem with the dollar, which I believe that was down in this push, 8:57, I think, yeah, 8:57, yeah, there you go, 8:57, 9 o'clock. Then this is gonna rally up, and at that moment, I was looking at. Let me go to ES. You're gonna see it in ES. I was looking at low, high, lower, low. So I was waiting for price to come back and see this as a breaker block. And there you go. It's marked right there, 9:15. Not inside of a macro. Retested it and it rallied up higher. Same thing on NAS. Just 2 minutes later, we had that low, high, lower, low. It's really unclean. You're gonna have to be really have to study this stuff to be able to see that breaker block before the fact. And then you can see we traded through it, came back into it, almost went into this inversion level. I really wanted it to trade into that inversion level, but it didn't. It didn't do it. And we then saw it rallying subsequently higher, clearing out the high. I wouldn't have taken that anyway because it's not inside of my macro. And now, as we are sitting and watching this, we can see that price gave us a high, low, higher high, which this would be a valid breaker block because they took out this liquidity and it traded lower. Although remember we had 945, which I can see the volatility stepped in at 930. It stepped in at 930, right? And then 945, yeah. Nothing's happening. Nothing's happening now. It's all over. It's done for. 930, they used that 945 PMI number and they pushed it down lower. So that's in one sweep foul move. I would almost want to say one sweep move. It really pushed through the break, activating the breaker block, and then this trading up higher as like a line in the sand, right? Like a line in the sand. If you look here to the left, this would have been like an inversion level now because it traded through it and back down in line with an order block right there, right? So that would be like an inversion order block, breaker block. As soon as it rejects it, really starts showing you that it wants to reject. That could be an entry right there. Or you could wait till it rallies away. Target would be below this low, and you got a bunch of liquidity sitting below there. Right there. So then as soon as it retraces, it's still valid. It's still valid. And you got this wick, take also this order block, 50% of that wick, 50%. I think it traded it right there. As soon as it trades that breaker block, rejects off of it. I would like to see how it opens up first, and then if it traded up higher, as soon as it rejected it, bam. That's a solid, sweet. That would be an entry. Although we had the news event, and this price action is all over the show today as well, as you can see right in front of you. The stop would have had to be above the breaker block as usual. Stop would have to be there. And the take profit, as I said, below that low right there. As you can see, that would have been 5 handles. Or if you wanted a bit more, then you could have targeted that low right there if you really wanted to target a bit more. And 5 handles would have been below that low though. That would have been sufficient enough for me. It's like 2 candles, bam, low resistance liquidity run. You're in and out, and you're done with it. That to me is fantastic. I wouldn't even have bothered to hold on to it, but you could hold on. You could take your 5 handles off if you were doing more than one contract. Take 5 handles off and obviously leave a runner on that could be targeting this low. And then, of course, you would be looking to take your stop and move your stop to break even, right? Move your stop loss to break even, cover your commissions and costs. And then leave the last runner on to target this low, which, as you can see, basically in that very same candle that we traded the low, it just went down there. And you would have sat there for 1, 2, 3, 4 minutes, and then it would have came down and hit your, oh, not even 4 minutes. Look at that, they're kind of right. So you would have only sat there for like an extra minute, and then bam, would have hit your limit, and you would have been out of that position. So that would have been a winning trade for you. But this is really conflicting price action because since on a daily we are expecting higher prices, but just because of what is going on and the read we're getting on price action. Now look at that, dollar is reaching now for those targets. Bam, dollar is reaching for those. That would be the perfect first take profit point. Look how beautiful price is trading now too. It just had to go all the way down and had to clear this. It's inside this weekly fair value gap, right? I think it traded the mean threshold of that. It did. It traded mean threshold. Ooh, we can just go ahead and mark this, I think. Mm, it's gonna be manual. I have to be manual on this one. Just mark it. Yeah, that's about it. Let's just take a horizontal line, just for the sake of, for demonstration purposes. We can just put a line right there and get rid of this fib and just say weekly fair value gap, consequent encroachment level. Go down back into a 1 minute time frame, and there you go. You can see that we traded the consequent encroachment and price. Then you would be looking at a targeting scenario of looking at this high. And if I pull the fib out one last time, this would also be a breaker block. Price never gave you an opportunity to get back into that trade. But you could measure, right, got it the wrong way around. You could measure this up to this high, and what's the first deviation you get above this high would be this deviation, which that's one full deviation. That's a beautiful little move right there. You can see that candle came right to its stop right there. That's a beautiful first take profit, and there you go. The price just fell short of hitting this fair value gap. It just fell short of it by a couple of ticks, just by the spread. So that's beautiful. And your second scenario would have been this fair value gap. This is a confluence. So this is right here, and you also have this weekly fair value gap high, which it's all adds up to make a great place to take something off. And then this level and this level would be terminus. So that gives you a confluence. This gives you confluence with this, and then you could also take this, and you would probably be able to measure it by, if you look at candle high to low bodies, then we can see that this would line up with this. This lines up with this and this. And you can see that would have been hit. So that would have been 1.5 deviation that would have gotten hit right there. And you can relatively see that the other deviations are still relative. This lines up with that fair value gap, and this also lines up with that inversion level right there. So these are all beautiful little, and it's also halfway between this and this. So that's, you know, that's another way you could look at targeting. So that is quite interesting to look at. I was looking at this and I was like, I think we have a buy model sitting right there. A beautiful buy model, which we did. And then Dow, look at Dow. Dow is like, this is Chop City. I think we can minimize that. And you can see now this is really just up and down, zigzag. We are still inside of the zigzag. If we don't close below this, let's just go back for the sake of having the analysis. If we don't close below if we don't close below, this is like this is like the gap I have, and then I had a fair value gap there. Now it's visible on the chart. Like I had this fair value gap, which was like, to me, if I want to see a close below this. So if we can get a close below this, then that would be really indicative of us seeing bearish price action and then targeting these equal lows. I would love to see it trade through it, retest it, send it down. And if we get lower prices here, that would send futures reaching for its targets right above us. Same thing in ES. That would just line up with what I see on these higher time frame charts, which that would be beautiful if we can get that. So there is going to be a second part to this video. So that is just a review, a recap of what we expected and what's unfolded in the marketplace. Then I want to go and I want to switch over to Forex for this one. And I've not mentioned Forex because I just don't look at Forex markets anymore. And we're going to look at that Asian range model. And I believe what I did in that video was I explained how we get the Asian range, we trade into that Asian range, and we cleared the high, and then we trade for the lows. And then we had a second scenario where price just left the Asian range, rallied down, and then I showed an example where I targeted the Asian range and the Asian range highs as that would be like a profit target if you took a trade idea. But I didn't show an example of how price action you would have your Asian range, and then price would trade out of the Asian range, retest that Asian range, and then continue the trend. So we're going to look at that in the second part of this video. So stay tuned in for that. Welcome back, everybody. This will be the second part of the video where we take a look at the Asian range model, and we will look how we can utilize the Asian range, and we can then find a continuation trade idea. So looking at dollar index, now this is a day later, as first part of the video that was recorded yesterday. We traded into this weekly fair value gap consequent encroachment. We rejected off of it. Prices in a tricky area. Very honestly, it's been in a very tricky area between this weekly fair value gap, high and low, and consequent encroachment, as well as between this monthly order block level right over there. So price is stuck between two BD arrays. We anticipate and expect consolidation, but since we rejected this does indicate higher prices to us. Let's quickly pull up Euro USD, and let's go over to Forex. Euro USD. Let's just go ahead and use FXCM. Pull up the chart. It's quite interesting to see that even though I deleted the chart, that they still have my levels pulled up on the chart over there. We basically traded this. a fair value gap and up. Weekly balanced price range. Look at that. Beautiful. Price colored outside of the lines, but the bodies came right back into the PD array of that weekly balanced price range, and we started precipitously falling down lower. We're currently resting inside of this fair value gap, right about to trade through it, and then would be nice to see that retest and then push price lower, obviously. And then we would be looking at this I fair value gap, keep the level, keep it over there, keep an eye on it. Ultimately targeting daily, this daily old low. That would be the target. And after we clear this, we would look to clear these equal lows as well as these ones. But those targets are obviously targets that we would have to look at in a later date in the future. So going up to weekly, we can take a look at this balanced price range. We can see price traded into it beautifully, rejected it, came down. We're also inside of this order block, and we're targeting this daily old low, which we can note this as a weekly old low since it is sitting on the weekly chart. So this has more confluence, more draw on the liquidity. Overlapping with it, we also have this order block sitting right over there. Quickly glancing at a monthly chart, just forget about that for 1 second. We can see that we traded into this wick consequent encroachment just about on the monthly, and price is now pushing down, which, as we can see, this could also be classified as a monthly old low over there. So there we go. That's bias. Bias is bearish. So let's look at this Asian range model. So note times are set to the New York trading hours on my trading view. So that's for your references. Make sure that your platform is set to the same times so that we are looking at the same piece of price action and that we're on the same page. So first thing first is let's take a look at, let's just go up to an hourly chart. That'll be the easiest. And let's have a look at this morning's Asian range from 2 to 4, and let's see if price gave us any setup. So there's 2 o'clock, take your line up to 4 o'clock. Perfect. So the second step in this process, the first step is you identify the Asian range. That's from 2 to 4. That's what I use. I don't use the full extent of that Asian range. I use the core content. You gotta go look at your core content. I reference the times that ICT gave in the core content, which is a little bit different than the ones that you will find on his free YouTube earlier posted videos. So reference to that 4 times. 2 to 4, that's what I use. And looking at a 15-minute chart, step number 2 is, well, obviously step number 1 would be, first of all, before you can you really utilize any concept in trading, you really need a bias, which we did that, and that was step number 1. I identified the bias. We were looking for prices to go lower, right? So that's done. Step 2 would be your Asian range. You come down into your your lower time frames, identify the Asian range, mark it out, and then we find the low and the high. So this is going to be another range. So let's see the low and the high. So that can be wicks. There is the low for that specific day, which, by the way, that was today. And there's the high, so we can just mark that out. I just mark it out on a 15-minute time frame. You can mark it out on the hourly if you prefer. So now looking at this model over here, what we do is we have the low and the high. So we could just extend that, honestly, like it was in the first video that I did. And we can just extend this through the day, right? Now with this particular example, price was inside of the Asian range. It traded around, and it traded through the range, and it never really retested this range again. So in this particular day, price never traded back into this range to give me a PD array inside of this particular piece of price action. The only thing that price did, which I would consider this valid, is we have this fair value gap at 8:50 a.m. So that would just be inside of early London, early, not London, but early New York session. So that would be early New York session. Just take a look at how price just consolidated for the whole day, and basically London session price didn't really do much at all, just dropped around. So this would be valid. I would consider this a valid fair value gap, since this fair value gap was formed inside the high to the low of the Asian range. It was formed right at the low, and price just barely tapped into it 8:59, which is your PM, your New York session open. So there you go, tapped it, and price rallied down lower, targeting, let's go to a higher time frame. What is that level? This is a daily fair value gap, which I just took note of earlier. So that would be your target, and let's just go ahead and pull this closer so we can actually reference this. So there you go. That would have been the target for today, and that would have been the trade for today, and that's how I would have formed or came to a conclusion that I wanted to take. If I was going to take any trade, then that would have been the trading idea that I would have taken. Although this one might have been one that you would have skipped. You perhaps wanted to see price come back inside of the range. Basically, what I'm looking at over here and what makes sense to me is that price formed this fair value gap inside of the range. And if price trades back to that, then to me that is valid enough to send price lower with the bias. Now, you do need to have a narrative for price to go lower. And if we just snap back up to a 15-minute, this is probably something that I should have done before I started looking at entry models, is that you need to have a narrative. Okay, I expect bearish prices. Why should price be going down lower? Well, you got an equal low sitting right there, right? So equal low, that gives price a narrative, although the narrative was hit right there. So that might be conflicting again to your particular idea. Let's take a look at a 5-minute chart. See if we can find anything on there. My eyes really do draw to these equal lows. Although I would also consider this an equal low over there. New equal low formed. And then if I go down to looking at this over here as well, we have this big wick, which you can take the consequent encroachment of, and that's going to give you this fair value gap. Although this tail of this candle is more just of a stop hunt move, so again, I wouldn't really want to reference that. But just looking at this piece of price action as well, we also have a high, low, higher, high. So this would be seen as the low of this range would be seen as a breaker block candle right there. Those two down candles right there, high, low, higher, high. Those two down candles extended through in time. So this is a breaker block overlapping with a fair value gap. So just look at how beautiful that is to see this in price. Just more confluence is why this level did send price down lower. Very beautiful to see that indeed. Get rid of that. So there's a bit more confluence for you over there. But this is, I would consider this entry to be more of an advanced entry. And then again, if you were trading specifically and looking for fair value gaps, then you would have seen this one probably. But for instance, if you were maybe a inversion trader, then this would not have been applicable to you. This is not your model. I can see in this piece of price action, I can also see a breaker block right there overlapping with, this is an order block, this up candle. Again, breaker block, high, low, higher, high. We took out that low over there, took out that high, sorry, took out these highs. So that's enough reason to give stops taken out there. Breaker block. And this order block with this fair value gap. So that gives it quite a few confluences. Although let's see if we can find an example that is a bit more clear to the eye. Maybe something that's a bit easier to see. By the way, before we move on, let's just take a short there. And if you did take that position, your stop would have to be above the high that created this fair value gap. And then take profit. Well, a simple way to take profit, we could look at the fib. Let's see if this fib is gonna work with me today. We can look at the high to the low. Okay, perfect. It's working with me today. And then we can look for projections down lower. Then this would be one deviation lower, and two deviations lower would be over here. So in this position, if you were looking for profit targets, another thing that we could also do is if we add a fib and we measure this daily fair value gap. Let's see if I have this template on here, which I don't, but I can quickly put this in. If I look at, let's say we were looking at a 0. point. Is it gonna be 75? I think 75%. Let's see if it's gonna give it to me now. Nope, didn't give it to me. Is that 0.75? Is that it? Okay, 0.75, and let's also take a look at 0.25. If we divide this fair value gap into quadrants, and just forget those lines up there for a second. If we divided this into quadrants, and you were looking at this specific level here, which basically this is going to be consequent encroachment of this, right? So get rid of this stuff. We don't need this stuff. So if you look at this, and you look at the consequent encroachment of this level as your first partial, or maybe perhaps your take profit point, then that overlaps with what would be two standard deviations of this projection right there, projected down. So that's something you could be looking at. That's a confluence that overlaps. If you didn't look at that, then another thing that you could have looked at, perhaps, my eye immediately draws to this inversion level right over there. So that inversion could have also been a nice area to take a profit or take a partial off. And then obviously we have equal lows down there, which are also a very good point to take something off. And if you see, with this one, you do go a little bit lower. You have to wait a bit more to get your profits, but it did get hit very beautifully. So there's a couple of ways how you could have looked at taking your money off of the board. So let's just pop this puppy up. So looking at this, that would have been 27 pips right there. So that's really, really good. That's not bad at all. Although you would have had to sit through a bit of chop, bit of up and down. And we have this order block over there. You can see price basically came down and then back up, kind of trading into this structure. And then it traded up one more time. It just barely tapped the low of this order block, and then it cleared this high. So it's like one, two, like a three drives higher pattern, and then it tanks, or one, two, three drives to tanks. So and then it traded into that. There's a little fair value gap over there. It traded into that fair value gap, and it basically tapped the low of this order block right there. Not the low, but the open. Traded that open, tapped it, and then price gave up the ghost and it rallied lower, trading into this fair value gap. Really sat through that, and then price eventually traded lower. So this was a very, very high resistance liquidity run trading idea. But anyway, that's one way of summing up that specific trade. So let's take a look at another one. Let's see if we can find one on maybe Wednesday had a better scenario. Let's take a look. 2 o'clock. All right, 4 o'clock. 15-minute time frame. So if I look at this one, get our trend line. Okay, the low comes in right there. We can just extend this through the day. and the high of this range basically comes in right at this candle over there. Yeah, that's about good enough. And in this example, once again, we didn't come back to it over here. So this might be another day where you just don't really get any setup, or it might just not be something that you're going to trade. So price again, the high was basically formed right inside this last 4 hour. Why does it show it like this? Why does it show it like that and then it anchors up to this candle? Why does it do that? See that it's placed right on the 4 o'clock candle, by the way. Just so you guys are all with me and we're on the same page about that. So that's quite strange how that does that. But we're gonna use that price level. It might have been a wick or something like that, or maybe it's just a platform. So in this particular trading idea, this over here you would apply the other model, which in the very first video that I released on the Asian range model, where we basically traded out of this Asian range, and then we traded back to the Asian range, and then we basically used the Asian range as a target, which you can see that happened very, very late in the day. Very, very late in the day. Price came back to that and traded back into it. But you could have used that premise to obviously go in here and find a setup. There's an order block, 947. So that's well in the New York session. Could have easily found an order block trade up here, traded through it, traded back into it. There's a bunch of order block trades over here as well. There's another one, order block, trades down through it, back into me, threshold of it, trades down really aggressively lower. This is your confirmation. Elephant steps into the room. And then we have another order block over here, overlapping with a fair value gap. There's an entry over there. Price trades down lower. As you can see, that is about 17 pips, which is also not bad. So there's multiple ways to get involved with that trading idea. Although if you did take that trade, you would be going against the daily bias, so you would be expecting like a retracement move, or you would be expecting the move lower. We would not expecting a retracement, excuse me, but you would be expecting a move lower because we would be looking for lower prices. But that's not what I want to explain in this video, so we will not be reviewing that in depth. Let's see if we can find another example. And by the way, this week it's been very, how can I put this? It's been not the best in terms of providing clean, one directional price action. So, like, let's just say, I'm not really worried about really getting in there, getting a trade. And yeah, if a trade idea forms and I miss it, then I don't really care because price is not the best, anyways, at this time. So, it's not a big deal for me. It's just been one of those weeks where price has really been, especially today as well. If you were checking NQ and whatever, price has just been up and down, and been a little bit crazy. It's still the last week or so of Jan, and price is still getting back in its ways. So let's look at Tuesday. Let's see if we find any setup on Tuesday. If we don't find one on Tuesday, I'll just scroll back a week or two, and I'm sure we will find something. Tuesday. Okay, there's 4 o'clock. Three. There's two, three, four. All right. So in that particular day, you would be looking for shorts as well. You would be looking for price to push down. It's just been sideways basically. So let's go ahead and look at this. There's the high of the range. And in this one, again, it really, it's a bit sloppy. It is a bit sloppy. Let's go see Thursday now. Back over here. There we go. This is one of those days again where I wouldn't have felt inclined to get in here. Honestly, it's running down, running down, running down. Really messy price action. I wouldn't feel inclined to want to get into any type of a trading idea over here. This is just not what I would like to see. I would like to see a move out of the range and price come back into this range and rally lower. Although I, you might find something in there. Although I wouldn't feel inclined to take a trade over there. So that's just a passerby. I wouldn't take anything over there, pass by. So let's quickly take a look at last week's price action. Where last week we would be looking for price to push up to the weekly balanced price range. So let's go in and take a look at Monday's. No, let's look at. It's pretty insane how we traded really crappy last week. We did last week was not the best either. Let's take a look at Wednesday or Thursday. Vertical line. You can see there Tuesday was one of those days. Well, let's look at Tuesday actually. Let's see if Tuesday does give us something. Tuesday, 19 December. That is like way back. That is not last week at all. That is not last week at all. Let's go look at it anyway. I think we might get a example over there. Let's go to 1 minute chart, 19 December. I don't know if this is gonna go back far enough. Of course it's not gonna go back, right? Okay, so that idea is out of the window. What was I looking? I was looking at this week's price action, which is really shitty. That seems quite convincing. Let's take a look at that. That seems convincing over there. Although I'm not 100% sure if it is. This was on January the 24th. But this would be. No, wait. This just. The 18th. Okay, well, the 18th makes more sense. I want to say, well, it was couldn't have been yesterday. I mean, goodness. So let's see. Does this give it to me? No, it does not. Well, that's very nice of you. What about we're doing this one in a sort of a live fashion. Live fashion. So you just guys just have to bear with me and be along for the ride. And we can learn together. Okay. So this particular day it's not going to be one either because you're going to basically trade out of the range and you're going to trade back into the range again. So it's not going to be the idea we were looking for. To find a good idea. This is going to be the same thing. Price is just maybe, maybe, I don't know. We have to go and see. Let's take a look at that and see if we can find any setup there. Well, this particular day, you wouldn't be engaging this. I hope not. This is really bad price action. So that's like a no no. You just don't engage in that at all. That's no no. It's proving really tough to find a really good example for you guys today. It's really proving hard. I wonder if we would get an example in a day like this. Let's check it out. That is the 16th of Jan, which I hope it's going to give us. If it doesn't give us a 1 minute, I'll just use like a 5 minute or a 3 minute. It's going to be the same idea. The high is going to be there. Let's see, where would low be? Low would be over here, right? Okay. Now this would be really dependent, right? In this particular example, if you took a trade, London Open, which I'm not sure if it's going to give it to me 16th of Jan. I don't think it is. I think we tried to go to like the 18th and it didn't want to give it to me. So let's just look at a 5 minute. Let's look at a 3 minute of that. Maybe at a 3 minute, it'll give it to me. It still doesn't give it to me. 5 minute, does a 5 minute give it to me? I don't want to look at December. I want to look at January the 16th. Freaking thing. Okay, this one doesn't give it. Okay, so we can probably get away with a 3 minute, right? Okay, perfect. So in this particular example, you would be looking for prices to ideally push lower. Since we did trade this weekly balanced price range, you would be looking for prices to trade down lower. But this is very messy price action. It is a Tuesday. This was a Z day, so this is quite the risky environment to be in. But I mean, if price is trading live and you're looking at this, then I can see that price traded down lower. And price tested it again. 839. 924. This would probably be a possible idea to get in long. And then if we were looking at, let's go look at narrative, which we have this low right there, and then we have a fair value gap sitting over there. So we can just use this daily fair value gap as a premise of target for the same idea. It just gives you the general idea, but it's about the concept. So that would be my narrative. Daily bias would still be lower. So if I was looking at this and I was looking at this live, I see that price traded into the zone, okay? Traded into it a second time, which this is really clean, actually. Clean. It blew these highs out. It's inside of that fair value gap, inside of that order block over there. It's inside of this order block over there. See that? It's inside of it. We have this order block, fair value gap. So let's, for demonstration purposes, let's put these lines on the chart. I don't always look at these lines anymore. I just look at it and I can see it. So that would be the trading idea. Again, it's going to be a fair value gap, order block type of a trading idea in this case, because that's what price has given us. So looking at let's look at a short position. Short would be somewhere in there. It's has to be somewhere in there. Stop would have to be above the fair value gap high. Take profit could be below these lows. So if I was looking at this live, then I would have came to this conclusion, seeing that this is very clean. It took those stops out, so price should give me some run lower. So I would target this low, and then I would also be targeting this daily fair value gap, which is going to be in line with that 15-minute fair value gap, which I think was a little bit lower. And then another thing we could do, let's see if this is going to work actually. If I take a fib, there's the little swing that takes out this high, trades into this order block, fair value gap. If I take this high and I take this low, let's just take candle bodies in this example because we're not working with the biggest range. So if I do that, then I get one deviation, two deviations lower. That's not bad at all, and not very bad at all. Really nice. So that's a potential way that you could have looked at it. Let's take another fib and let's actually draw another one. Let's draw it. Let's draw it from this high to this low. Let's see if we get any confluences. We get a 0.5, so this is half a deviation lower. So that does confluence with this as well. So that's another way you could have looked at that. But the simplest and easiest way to find where you would have taken profit would be below this equal low, right? You got this low, you got all these relative approximate lows, equal lows, bam, bam, bam. So that would have been where I would have wanted to take a profit. Look at the high of this daily fair value gap. Look at the mean threshold of this, which would be down lower. Let's crunch it up. Okay, that would be down way lower. So we could look at it like a 75%, like right about there ish, to take something off. But this would have been, with time of day, this would have been perfect. Since this is your Asian range, and then price trades back into the range over there. So the main swing took out these highs, okay, beautifully, and it rallied down, taking out market structure shift. So all of this is in discount. All of this is discount up there. So greatest swing high to low. This would be above 50%. Fair value gap or the block. This is all in a premium. Rallies down to the low. And at the time of looking at it, you'd be looking at something like this. And you get a 15.6 pips. That, I don't think that's bad. That's relatively nice. Not bad at all. Almost half of 30. So that's not a bad little run to just grab what you need and get out of the marketplace. So that's one setup. Now this is how you would utilize this Asian range setup if you were looking to get a continuation, because this is a continuation. You expected lower prices off of this weekly balanced price range. Up there, price rally down, down, down. This Asian range, price gets out of it, trades back into it. Look at time of day, find your specific setup. There's your New York session. Look at that. That's a nice and clean. If you look at this price action surrounding, this is all messy. All of this is messy. But early New York, price trades up. It's clean. Price rallies down. That's really clean. Takes out these stops. You have an order block, fair value gap over there, extended out in time. And then price trades back into this order block, fair value gap. Really clean. Time of day is still perfect. Take a short right there, aim for the low, and you grab your share for the day. I wouldn't really be looking to engage in any of these other price swings over here at all. To me, that's the cleanest piece of price action in that specific day. And even if I was trading and I wasn't even looking at this Asian range, then I would probably have came to this same conclusion as well, because it's just time of day specific, where you would be looking at that specific time of day, which is the New York session, and you would have came to this conclusion. So that's going to be it for this video. It's not going to be a very long one as far as the Asian range, but it's a continuation. And hopefully you have learned something from part 1 of the video, where we explained where we just went over a couple of those trades that transpired, and gave a little overview of what happened as far for the week. So hopefully you found this insightful, and until the next time, keep safe and good luck.